All right, welcome back. You got the market up steady. Let's just identify a few stocks before we welcome in our next management on the program. Eicher Motors is down 4%. It's at about, 35.56. Indian Hotels, we had the management with us earlier. That's recovered a bit, but still down 4.5. GNFC has been a loser since the morning. Trent is down about 3.75%. There is Campus Footwear. These are by far the greatest volume-led names on the downside. 6% lower on Campus. You've got Aster DM, which is down about 5.6%. Teamlease is down 3.5%. Ujjivan Small Finance Bank down 3%. And you've got Axis Cades, which is down 5%. So lots happening in the broader space. The interesting bit is that the last couple of days, the number of stocks on the downside with huge volumes, that was actually picking up quite a bit. And many of them were earnings-led in the broader space. And what yesterday's sort of US market session has done is it's kind of provided a bit of a floor and a momentum in the opposite direction. Will it last is the question, because last few sessions for the broader space, it wasn't looking all that good. All right, let's welcome in the management of JSPL. And JSPL, of course, had reported numbers. Adjusted EBITDA and standalone EBITDA per ton came in slightly below street estimates in the second quarter. However, top line was better than expectations, while an exceptional item weighed down on profits. Let's discuss all of this with Bimlendra Jha, who's the managing director of JSPL. Mr. Jha, great to have you with us here on the program. Thanks very much. Prashant this side. At the half-year mark, Mr. Jha, volumes were flattish at about 3.75 million tons. For the full year, what kind of volumes can you do, sir?
The first half of the year was 3.75 million tons, as you said. The second half of the year should be better than this. We expect it to be closer to 4 million tons. And we are on that track with respect to all our shutdown plans and everything else being already behind us.
Mr. Jha, I think previously you had guided for FY23 volumes of 8.1 to 8.2 million tons. If you do 4 million in the second half, as you just told us, that would mean FY23 volumes will be sub 8. Is that what you think?
I said upwards of 4 million tons. I didn't give you an exact number.
So would the number be 8.1 to 8.2?
I won't give you forward-looking statements. Sure. If you are looking for any forward-looking statements from me, it would come.
Okay, so exports right now are a little less remunerative, but domestic demand has been fairly strong. Could you comment a bit on how you expect exports to be from here on, and where is the domestic demand coming from?
Actually, if you really look at the situation in India, it is the strongest situation for the steel industry in the world. Amongst the major economies, we are the ones who are actually doing the best in the world. And that is on the back of domestic demand, which is, again, on the back of something much stronger, which is all this Atmanirbhar Bharat, Make in India schemes and all that, which is bearing fruit. The localization is actually bearing fruit, and we should be looking from any company's perspective as well as steel industry perspective, that how do we partake in this growth story, and how do we partake in this booming economy against all the doom that is visible across the world. So I won't focus as much on export unless it is an opportunity that from a financial sense makes a lot of sense, or there are existing customer relationships where we are obviously committed to serve those customers. But there are customers in India who are in the infrastructure and construction space where most of our products go in, and that is a booming sector. We are working very closely with that sector, and we are reaping the benefits of that. So I am not too keen on this distinction between domestic and exports.
All right, got that. Mr. Jha, good morning and thanks for joining us. This is Pavitra. If I can ask you on the EBITDA per ton, there has been a significant drop to around 7.1 thousand per ton. Can you tell us where it's likely to move, or how much of an improvement we could see by the end of the year in the coming few quarters?
So if you really look at where we are coming from, in the numbers, you have to decipher these numbers a little bit. Because sometimes when you take the right decision from the company perspective, something else may not look that great. So, for example, our volumes went up by 15%. Our cost went down by 8%. But the net sales realization, that went down by 12%. Out of which, if you really look at it, in terms of inventory, we really made a significant reduction in our inventory from Q1 to Q2. Now, this inventory itself was at a much higher cost. And we took a hit of almost 600 crore rupees on EBITDA front, which is about 3,000 rupees per metric ton. But it gave us tremendous amount of cash. And our focus is on cash because let's face it, that in business, cash is the reality. Profit is an opinion. Now, we are focusing on cash. And as far as that journey is concerned, we are on a very positive trajectory.
Okay, cash is reality, profit is, you said perception, right, Mr. Jha? That's
Opinion.
well put. Yeah. Opinion. A lot of the new age companies would be well advised to listen to this part of the interview. That's well put. Let's just compare, just to talk a little bit about the outlook on debt without going into specifics, as you've clearly said you won't. Net debt has come down to about 7,000 crores, but you have large capex lined up. So how will that trend from here?
So see, what we are trying to do is that on the existing businesses, we are committed to constantly reduce our need for cash from any external source. And that is what you are seeing being reflected in our net debt position or even gross debt position. And we are constantly on the right journey to even eliminate any net debt from the base business. But why do you keep the powder dry? You want to keep the powder dry because you want to invest in your future. And we are committed to invest in that future and constantly keep our balance sheet healthy enough so that we are able to invest in the right projects at the right time. So that's our philosophy. And I hope that the market understands that philosophy fully well.
Projects at the right time, sir. Are you hinting at some acquisition, any inorganic move?
See, there is no steel company in the world which is doing well, which does not keep on looking for opportunities. As of now, most of our opportunities are around our own brownfield expansion because we have plenty of land, things are more in our control. We can determine what needs to happen in what kind of time frame, at what kind of cost, and that is our primary focus. But if we don't keep looking around, and if something is available for a song or for a reasonable value, why won't one look at those opportunities? But the primary goal has to be to continuously create more and more value. And that is what we are focused on, whether it comes from brownfield, greenfield, or any inorganic opportunity, that's different.
So just one word answer, the current price of steel today versus the average of Q2?
The average net sales realization, you will have to give me a second to be able to give you that answer. You are obviously asking me at JSP level, right? I'm sorry, I just had the paper in front of me so that I don't give you an answer which is...
So you know what, we'll connect with you offline to get those details. But thank you very much, Mr. Jha, for joining us. That's the word coming in from JSPL. The stock has been a rank outperformer in the steel basket, and today it's up close to about 5%. Get into a break. Inox Green Energy IPO opens today. Devansh Jain, the executive director of the group, will be joining us.